Hello. Okay. In this video, I just want to very quickly go over the maximum budget calculator so you understand how to use it, okay, and how to modify it and how this tool can be used as you're shopping and looking for a home to purchase, okay? So in this first column, first thing we have to do is just answer all of the questions, all right, in order to tailor it to you and in your situation. So in yearly gross income, if you can put the combined amount of income of everyone that is going on the application. So if it's a married couple, and each partner makes $50,000, we can say 100,000. If it's one person by themselves and that person makes 50,000, then it's going to be 50,000. Okay, so this is the combined household income, and I want this video to be quick, so I won't go too deep into qualifying and non-qualifying income. The only thing that I will say, if you're going for a conventional or an FHA loan, it's the income that you pay taxes on. So if you're self-employed, you made $1 million, but you only claim $10,000 in income to the government, then for conventional loan purposes, what we can use is $10,000, the income that you claimed on your taxes. Okay, so current debt here, car payment, credit card, student loan, those sorts of things. Okay, so if you have a $500 a month car payment, then you put $500 here, or someplace close to 500. That's fine. So $500 car payment. And now for credit cards, not what you send in, what the minimum payment is, because almost everybody sends in a little bit more than the minimum payment, right? So if you have a $2,000 a month Capital One, you send them a couple $100 a month, but the minimum payment, the minimum that's required is $58 a month. If you want this, by the way, if you want this section to be super accurate, you can go on Credit Karma and look at everything that's showing up on your credit report, and you can add it up and make sure that you have a really accurate as far as the debt payments. Okay, so $500 car payment. Let's say you have $100 and something in credit cards, so you make $100,000 a year. Everybody on the application makes $100,000 a year. They have a combined amount of debt payments of $642. And here you can put how much you have saved for the down payment. Let's not forget about closing costs, okay? But let's say if you want to put $10,000 down. And down payment assistance, if you're going after any down payment assistance programs, so like for example, if you have I know one in let's say, well, let's go Delray Beach, because I was actually able to get somebody through the program, although it's closed now. But they were giving out $75,000 in down payment assistance. So let's say you make $100,000 a year, but this would have to be like a 4-person family technically, because $100,000 a year is a lot for down payment assistance. Anyways, let's not get into that. $100,000 a year. This is realistic, and somebody making $100,000 a year, it could realistically qualify for down payment assistance, but more than likely it's going to be a multi-family or a multi-individual household, so like a married couple and a couple of kids, something like that, or one kid. In any case, so $100,000 a year income. Here is the credit card and whatever payments and student loans and all that. And then with the down payment, you have $10,000 saved up, and they're getting a program of down payment assistance and $75,000. And since we're using the down payment assistance, maybe the interest rate's slightly higher because of the high LTV. And let's say now this one is big, okay? Monthly HOA fees. And it's going to be especially impactful. Is going to be especially impactful if you're looking at a condo, okay? So now with insurance, around $2,000. I mean, I don't know. And then annual property taxes, roughly, a little under 1% of that. But like this information you can verify on Zillow. So again, back to the uh, monthly HOA fee. Okay, the HOA fee. Look what happens to the purchasing power. Because if you're looking at an HOA fee, more than likely it's going to be minimum of $500 a month. With zero HOA fee, we're at a 400 under all these pretenses. We're qualifying for a budget of 405,000. If we add a $500 HOA fee, that's $70,000 less. If somebody that's making less income, you go from being able to afford 200,000 with an HOA fee, it might only be $100,000. So it's something to be aware of. Okay, the HOA fee is something to be aware of. And as far as property taxes, okay, so I have real quick here to find HOA fees and property taxes. What's going on here? Come on. We're just taking a quick look at Zillow. If it decides to load. Okay, so here we have a $325,000 property. You see the monthly HOA fee. See that? $417. So we want to take that, and we also want to take a look at the taxes. Where is it? Taxes. Okay. Property taxes in 2022 were $5,000. All right. So if we wanted to see if we qualify for this condo, let's say no down payment assistance. It was $407 roughly. And then the insurance, since it's a condo, generally in a condo, and this isn't true in every case, generally in a condo, you pay for insurance inside of the HOA fee, but you like for the exterior of the building, but you still have to have insurance for fire. So that's why I put, $300 or $400, something like that for insurance, along with the HOA fee. And then as we saw, we have $5,000 in property taxes. So we bump this up to about 5,000. So in the previous example, a person, if they're making $100,000 a year, on this or in this scenario, we see that $286,000 is the maximum budget. But if we're able to get a good interest rate, then, or if we're able to get like pay off one of the credit cards or something like that, pay off the credit cards, then you see how we can work that budget up. And as you're looking at properties, if you want to see how, if you qualify, just make sure that you update the homeowners association fee and the property taxes, because as you can see, you pay more in property taxes, you can afford less, because what we're calculating for is the monthly payment. Okay, what we're calculating for is the monthly payment. Now, of course, if we increase the LTV, or I mean the debt to income, so if we go to 50%, then you can afford a little bit more. Okay, so these are all things that you have to be, well, that you don't have to, but things to be mindful of. Okay, and really, this tool, like, you contact me, I figure out what you actually qualify for. I make sure we look at your credit. I figure out what kind of approval we can actually get you, and then this is the tool that I use to communicate. All right, so I'm giving you access to the very tool that I use to communicate with clients in order to help you understand the mortgage industry better, and how pre-qualifying for a home and how homeowners association fees and all those things impact the overall approval. All right. Thank you very much, guys. We'll be in touch soon.